Good morning, traders. I'm Michael Sabo here with RJO Futures on Tuesday, May 7th with some commentary here in the energy market. So let's kind of get started here and talk about June crude oil here. You take a look at where June oil has been here. From May 1st here till yesterday here, beginning part of May, we were down around about $90 a barrel. Yesterday, we were hitting a high just over $97 a barrel. So we've seen over a $7 jump here in the price of oil, even with seeing a continued build in the stockpiles here. Now, currently oil's been kind of coming off here a little bit. That June oil is trading right around about 95.68 a barrel. It's off about 50 cents here. Brent's unchanged. Taking a look at the complex here, nat gas here, we've seen a big slide in nat gas. Most of that came on Friday, but nat gas back under $4 here now. We're trading around $3.97 here. That's off about 4 cents. Taking a look at the RBOB here, that's a little bit weaker. That's off here almost 2 cents at around 285, 20-ish area. And then the only thing that's bucking the trend here, we got the heating oil. We're up here a little bit in the heating oil here. We're up right now about 180 here, trading here just around the 294 area here, but mostly a weaker tone here today. And let's talk about some of the things that have been moving the market here. Well, one of the big things here we saw happening here was the tensions, things that are kind of escalating over there in Syria. And I think that did kind of add a little bit of fear premium here to the market, kind of helped bring crude prices up. But the idea is that if that kind of stays contained over there, unless it draws in other countries, we should see some of that fear premium come out of the market. And right now, it appears to be a low probability that it's going to draw other countries into that conflict, but we've got to watch that. There was news, reports there of Israel, bombing over there in Syria. That really has the potential to turn into something bigger than what it is right now. And if that happens and it sucks in other countries in that region, you could see prices shoot up over $100 a barrel. But right now, I think that crude prices are overbought up in this area here. We're in overbought territory right now, according to short-term technical indicators. My opinion of it is here, when you look at the short-term technical indicators, couple that with the ample supply of oil right now, I think prices should start to ease a little bit, kind of come back down here to the lower 90s. So near that 200-day moving average here, which is right around about the 92.5 area, 92.80 area. So I do think you could see some easing coming into play there. Now, equities markets have been pretty supportive there to the market. If you look at the S&P, the Dow, both making new highs, and we've kind of seen, around the world, we've seen, equities markets for the most part pretty supportive. So that's kind of helped, I think, push crude prices up, but I don't think it's enough to keep crude prices supported. Now, we are going to have API numbers coming out here later today, EIA numbers coming out tomorrow morning, looking for, you guessed it, another build. Traders are expecting to see about a 1.75 million barrel build here in oil. So, if we see something a little bit bigger than that, that certainly has the potential to weigh on that market. So traders should be paying attention to that. Give me a call, shoot me an email. You'd like to get into a little bit more detail. I can help you with some of the different strategies and how to take advantage of that market. And of course, remember that, futures trading does involve a substantial amount of risk. May not be suitable for all traders. Good luck and good trading.